is charts. So just to catch up, so went through where you can go and get your stock tickers. Then we looked at, how, so you did the exercise. Some of you discovered how painful that was, took forever in some cases, in most cases actually. Then we went through and looked at how to automate that process, looked at what kind of, where the big fish or the momentum fish swim and how you can get to free sites and grab that. So you now have what to buy, you know how to build your watch list, so that's underway. Today, you're gonna narrow it down even further and understand the technical aspects of when to buy. So this is the critical piece. So before you pull the trigger, this is the next thing that needs to happen in the sequence, right? So we're skill building, and as part of that skill building, you will, at the end of today's session, you're gonna be able to look at charts and you're gonna be able to identify a good chart, a bad chart, something that's ready to purchase, and something that needs a little bit more chart time. So you just keep tracking it, right? Keep hunting it, stalking it. Okay, so that's today's session. All right, so before we go live to a live chart, I'm just going to introduce charts in general, right? Because if you look at a chart, the minimal that you're going to need is, at the top is a price chart. So these red and green bars are called bars. So this is like a bar chart. You can have you can have just a line up here, that'll be called a line chart. You can have candles up here, that'll be called a candle chart. But it doesn't matter, it's a price chart, because at the top you're looking at price. At the bottom, these bars are volume. And so basically what this means is if I just take one bar like this big red bar, so that bar has a corresponding volume that traded that day, which happens to be this big red volume bar. And the reason it's red, the red denotes that it was a down day, and that goes in sync with the red bar up the top. So typically if the price closed below the close of yesterday, it'll be red. If the price closes above the close of yesterday, it's going to be green. So to simplify it, a red bar means that the price closed down from yesterday, so it was a down day. A green bar meant the price rose from yesterday, so it's an up bar. So, and then on any bar, the other two pieces of information that it tells you, the top of the bar is the highest price that stock traded that day. And the bottom of the bar gives you the lowest price that stock traded that day. The range of the bar tells you all of the price points that stock traded during the day. And that's known as the price bar. And then a little dash that you may not be able to see it, but there's a little dash here. That little dash denotes where the closing price ended at the close, at the day's trading close. And we're going to get into that anyway. So that makes it. And then this scale up here is the price scale. So this was, it's $11 at this grid point. Closing price on this day, we're going to take this, which is that day bar, 1753. This is the price scale. And actually two other things to look at is this wavy blue line is known as the relative strength line. And what's important with this one, it's the slope of it. So if the slope is down, like in this instance here, or even if you take it from the high point, it's moving down, the general slope is down, that means this stock is underperforming the broad market. And the broad market is measured by the S&P 500 index, which is a basket of 500 stocks. And then the other line at the back is this faint red line, is the 10-week moving average. And the 10-week moving average is a lagging price indicator. And all that means is if you take 10 bars, that bar, 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 10 bars, and you add up where the price closed for each day, and then you do a mean average. The mean average in this instance would be this point here. It's about 30 points. So that's the average trading price over the past 10 weeks. And this scale, which it doesn't show on here, is a weekly scale. So each bar denotes 1 week's of price action. So if you're new to this and as a beginner, and even if you're fairly good CanSlim practitioner trader, you want to stay using the weekly bars, and you want to stay away from lower time frames like the daily until you get to a more advanced stage, right? And once you get more comfortable, and quite frankly, you don't really need to go beyond the weekly. You can make a ton of money just trading the weekly bars, and a lot of people, that's what they do very successfully. Okay, so and then this white line down here is the average volume over 10 weeks as well. So it's the same thing. So the red line is 10 weeks on price. This little white line here is the 10-week in volume. And you can see, you know, the line kind of ebbs and flows, but then all of a sudden you see how it accelerates upward, and the angle of ascent there, which shows you how volume picked up. And that volume was obviously this big selling in this bear market correction we just had. So that's the fundamentals of what you're looking at when you're looking at a chart. And we're going to do a lot of chart work tonight. So you're going to get this before we leave, right? Okay, so let me see. Are there any questions on the, because you need to have this down before we move forward with the rest of the session. I'm just going to wait a few seconds to see if there's anything in the chat box coming up. Okay, so we have a question. The RSL line is RSL stands for relative strength line, and that's a line that's that tells you how this stock is performing relative to the broad market, which is the S&P 500 index. And the way to read it is, if it's sloping down, that means this stock is underperforming. It doesn't have the price momentum. If the line is sloping up, that means this stock is outpacing the broad market. Okay, so you don't want to be in a stock that's pointing down, where the RSL is pointing down. You want to be in a stock where the RSL is pointing up, which means you are beating the broad market in terms of returns. Okay, perfect. Let's move to the next one. So since there's 7, okay, so I'm gonna show you a few things here. This is actually advanced stuff, but I'm sure you guys can handle it. So imagine each one of these is a price bar. I'll go through each one and right here. So if I take this as the closing price, right? If you see a green bar by itself, the color tells you it was a good day because the price closed above yesterday. However, you need to look at 2 more things. One is the position of the closing bar, because you can have a green bar, but if the bar closes near the bottom, right, that's actually a bad day because there was more selling. And you can then take a look at these volume bars down here. If you see the volume bar relatively moved up that day, that tells you that there was more selling than buying, and the sellers were generally in control that day. So you have to look at not just the color of the bar, you also need to look at the closing price of the bar, and you need to look at the volume bars to get a better read, right? If the bar finishes halfway or above, I'll just put this for halfway. So if the bar closes anywhere, actually let me move this out to there. If the bar closes anywhere above the halfway point, that means there was more buying that day or that week. And then you can see, you can check the volume. And if the volume was moving up, and that means that's good because the buyers were slightly in control. Or if the volume was dull, so we see small price bars, then that's okay. That means there wasn't too much action. So nobody was selling this stock off. It was fine. It was just no heavy selling, no heavy buying. It was just like a nothing day. And then you have the same equivalent whether you get a red bar, same kind of action, right? You can have a red bar if it closes up. That actually means there was more buying than selling. And if you get a red bar like this, and especially if you get a red bar like that with rising volume is bad. A green bar like this with rising volume, I'll do it this way. Green bar with rising volume is, so this is good. This is what you want to see. That means there's buying coming into there and there's more buying. So the chances are the price is going to continue to move up. If you see this, chances are prices are going to continue to move down. If you see this, that means it's actually good that although it closed down from yesterday, there was more buying interest. So it's called a support bar. And then this is like a stall bar or still a distribution bar, which means there was selling and it was disguised. So this is the art of reading the price charts. And this is actually pretty advanced, but I just wanted you to see how it works, right? And you won't have to go to this extent out of the gate. Okay, so let me see, moving on. Okay, so what you want to see is, first and foremost, you want to be looking at the weekly weekly chart, and we'll look at some of the stuff from the list, from the watch list that you guys have built before we finish. So the general concept is, if you were to draw a line from the lower left, LLS lower left, to the upper right, if you get a diagonal line tracing at roughly 45 degrees, and that would be perfect, right? Then you have a lower left, upper right looking chart, and that's what you want to see. Now, something else I pointed out here was, if you look at the beginning of 2018 to 2019, you see how generally price moved up. It was at this level, finished at this level. So price moved up, that's a good thing. And then from 19 to 20, yeah, price moved up again, so that's a good thing. Second year wasn't as strong. And 20 to now, price continues to move up, right? So this is kind of what you want to see in the stock. If the stock you are looking at does not have this shape, you don't want to be buying it, because it means, you know, if you put your money in, you're going to lose money, because the money is made to the right of the chart in the space that has yet to be filled, right? The blank canvas part of the chart, which is over here. This is history, and you're using history as a guide to figure out what's going to happen. And you put the probabilities on your side by looking for momentum, looking for a track record of price gains, and you're looking for this lower left, upper right pattern. Okay, so upper right is just the upper right position of the chart. So here's upper right, lower right, so right side of the chart, left side of the chart, lower part of the chart, upper part of the chart. All right. So for example, you don't want to see this price starting from here, coming down that way. So if your chart looks like it's coming this way, it means it's in decline, right? Price is falling. And we'll look at a couple of those. Okay, so moving on to the next one. So here's, all right, so, okay, so we've covered what charts look like. We've covered the basics of what you're looking at when you look at a chart. We've covered the price bars. We've looked at the relative movement between the price charts. So here's a chart. So for example, here's a chart, right? It's got that lower left, upper right look, and you have a rising relative strength line. So technically, this chart looks good, right? Now, if you are a value investor or you're looking to bottom fish, by that I mean you're looking to buy on the cheap, then, yeah, and you're looking at the chart right today up here at 150 at the highest price it's ever printed, you wouldn't be a buyer of this stock, right? So this is one of the great paradoxes of high growth stock investing. High growth stock investing is all about buy high and sell higher. And that is one of the great paradoxes of how the market actually works. So if you look at how you normally do things, right, most of you coming into, unless you already do this, right, probably wouldn't be looking to buy this here. You know, you'll probably be looking to see, okay, the stock had a low point at 25. I'm going to wait to see if the stock ever comes down at 25, or even maybe this consolidation area here, 50. But you wouldn't be looking to buy it at 160, right? Okay, so that's I kind of gave the game away, so I won't even bother asking a question. So let's move on. And so this is what we were looking at here. Oops. So this pattern that you see here is now here, and you can see what happened. And the reason, and these patterns, and we're going to go through three of them, and the three of them that we're going to touch base is 90% of the patterns you need to know. I won't even bother with the other three, or with the other 10%, because this 90% is all you need to master. Right, so for example, if we had a consolidation, you had the highest print at that point in time, but look what happens, right? This stock went on to make that move before it consolidates again, and I'll turn the price bar here. But your job is to identify a pattern like this, a breakout point like this, a buy at the pivot. We call the buy point a pivot. You want to buy at the pivot or within 5%, and then you want to ride it before it breaks again. And quite often, this ride is 20%. 20 to 25% is normal. There is an exception, which I think would just confuse the situation right here. Once you kind of go into intermediate level, we can touch it. We can look at it. So your job is to identify a pattern. Well, actually, before backing up, your job is to select the best stocks, which we covered. Buy out of a consolidation, right, like this, of a stock which has solid earnings. And we looked at earnings last week, right? And if you can get those three things done, then you can start picking off these 20%, 25%, 30%, 40% runs, and then basically cash in and then move on to your next opportunity, right? We'll have a look at this. We'll go live to the charts as well. And we'll look at what this game looked like. All right, and then it makes another pattern here. We'll look at this pattern, and then it makes this little run before the market broke. Okay, so the RSL on the weekly is that's a 1 year relative strength line. 1 year, yeah. Okay, moving on to the next chart. Okay, so here are the two patterns. So this is the first of the patterns you're going to master. Now, there's two ways to do this. You can either be an A+ student and learn the 3 patterns, or you can be an A- student, and I'm going to give you a cheat that you can kind of get to the same point without a lot of the pulling your hair out scenario. So here I drew the consolidation, right? And this one was a cup pattern, which is the cousin of what we want to look for, which is the cup with handle. A cup with handle, which I drew before, is basically the silhouette from a side angle of a cup, and then it makes this little handle, which is a very powerful pattern. And then when the price moves above the high of the left-hand side, like it did here, that's your breakout point. And the reason we want to identify these pivots is because in this system, this is the low risk entry. And a lot of people, intermediate people, advanced traders, they struggle with this. They want to buy down here. They want to buy down here. They want to buy moving through that price average. They want to buy at all points here, except the point that they need to buy. This is the point where you have the highest probability of the stock making a move, breaking out to high ground, and you have the lowest probability of the stock moving down. So you're putting, by buying at the pivot, you're putting all of the odds in your favor and you're stacking them, right? Because history has shown well over 100 years that if you do this, you can enjoy the upside and you can manage the risk to the downside. Because like, for example, over here, see, if you were trying to buy this dip below the moving average, a lot of people do this as a trading system, but see, the price just went down. You had no control of where the floor was going to be. And this is a fast way to, this is a higher risk strategy than buying breakouts like this. If you understand this, you're going to do really well at this. Okay, that's the first pattern, cup with a handle, or cup, just no handle, right? Pattern 1. Let's go on to take a look at this one. Okay, so so here's another situation. So when you look at this chart, it looks kind of, so it's hard to read if you're not used to looking at charts. But there's a couple of patterns on here, okay? And let's go on, look at them. It's out of order. Yeah, so here's the pattern right here that we were looking at. This was on the right-hand side over here. I think that's the same one. Unless my order's messed up, okay. And then in the W pattern, or double bottom pattern, so the double bottom pattern is like, it's basically 2 V's, right? The first shakeout, each V is a shakeout. The first shakeout comes, it goes down, and then those pullback buys are getting into the stock. And then the shorts come in and basically, this is really short covering to some extent. And then they sell it off again. And then you want the second V to be lower than the first V, and that's critical. If this bottom of this V is not lower than the bottom of that V, you have a flawed pattern. So it's not something you want to play. The buy point of this pattern is the peak of the W here. So you just draw a line straight across. It gets us to this bar. That's our pivot bar there. And you can see how the stock then from there moved up, and you would probably be selling it on this bar here. Once we get to the sell rules, you'll see that. So from here, it's a fairly easy ride, right? These weeks, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. So definitely week 19, you would have been out. And we'll look at the real charts in there. So that's the second pattern. And this pattern occurs a lot of times at market corrections and bottoms, just like we're experiencing right now. Okay, let's go to this one. I think that's the other sequence. Okay. All right, so I'll kind of show you. So this is the third, see, it's at the highest price traded up here, which is this point here. And that's known as a flat base. So a flat base is a consolidation, a narrow consolidation, usually with that from the high to the low of that consolidation, it's about 12 to 13. You can go out to about 15%, right? You don't have to split hairs on that. But it's a narrow consolidation. This is basically digesting this move. So it had a quick move up out of this consolidation. Now it's digesting it, and then it's getting ready, and then it breaks out above that resistance area there, and then it makes another quick rampant move. Now this is the market correction here. So those are the three patterns, right? So you got the flat base, right? You got the double bottom, and then you have the cups somewhere here, and you have the cups. All right, I'm gonna pause for a second because I hit you with a lot of info there. Actually, while I pause, see if there's any question, I'm going to bring up, actually, what I'm going to do is, first I'm going to go to Yahoo. So I'm going to show you how you can get this all for free. So let me go. So last week I took you to a couple of free apps. This week we'll add Yahoo to your list of apps you want. So you just go to finance.yahoo.com. You can just go to Yahoo and then click on finance. And then over here you have a search magnifying glass, quote lookup. So we'll just, I'll just bring up one of the stocks from your watch list last week. And we're going to go through that. I'll come and show all results. Click that. Okay, whatever. Then it will bring up the basic information on the stock. And in this menu bar up here, you see how the third one is called chart. So click the chart. So while this is coming up, so I'll come to the questions in a second. So you click the chart, and then you get the basic chart. Now, I've already changed this. When you come in first time, it'll default to daily. But if you, where it says interval, you can go to any of these time frames. So you want to select the 1 week. And it's a pity they don't have, ideally you want to have 3 years. They don't give you 3 years, but you can customize this by going to date range and setting the date range for 3 years. But this is good enough for government work right here, right? So now this is a weekly bar chart. Red bars are up. I mean, sorry, red bars are down, green bars are up. So that's what, all cool. You can actually add the week average line here, and let's indicators. So if you want to add the 10-week line, go to indicators. We want to select moving average. So it's a weekly bar, so we want to set it to 10 weeks. We just want to close, and we want a simple. I can change the color to, they're usually red, 50, 50, so we'll make it red. Save. And now you can see it's got this nice moving average. And so obviously, if the price is below the moving average, you know, the stock is weak. If it's above, that's what you want to see. You want to see the stock trade trading up above the moving average for the most part. Okay, so this is so that's how you can take a look. So in the chat box, right? Just from what I've just shown you, what do you think of this chart? And this is one of the stocks that's on the watch list that you guys, the composite watch list from what you put together last week. And we're going to go through that. But in the chat box, so is this something you would buy based on what we just looked at? We can't go back in the past and buy this. The question is right now, would you buy this now? Or would you put in an order in this stock right now? So I think good LLRU chart doesn't answer the question. So we have a not yet, we have a yes, we have a not yet, we have a yes in history, we have a yes, a not yet, a no, a yes. Okay, so it looks like the no's have it slightly, right? So I'm going to tell you, and we'll look at this. Is what stock was this? It's AMD, right? Yeah. So I'm going to tell you, you absolutely would want to buy this. I mean, that is a solid cup with handle formation. So you would be looking to enter this, right? And if it breaks through. Okay, so go to Yahoo, finance.yahoo, and your homework this week is going to be, which I'll give you later on, it's going to have you do this exercise and going through the NASDAQ 100 stocks. I want you to go through all 100 stocks, do it in Yahoo, and then I want you to send me for each of the stocks, yes, no, yes, no, yes, no, yes, no, if it's in a consolidation ready to buy. Okay, so that's that. So you guys are getting it. Okay, let me see what questions came up. There's one question about on the flat base pivot. So I'll show you on the chart in a second, but effectively on all of these patterns, you want to buy 10 cents or a dime above the highest point in the pattern. So in the flat base, you just look to see what the highest bar was, go 10 cents above that, and that would be your entry point. And in one of the sessions coming up, I'll be talking about how to put those trades on, tying it back to this, right? So just skill building. So you're now at the point of refining that watch list. And now you're looking at the technicals. Is this stock ready to go? You know, does it have momentum? Yep. Is it in a base? Yep. Is it ready to go? Yep. Right. So you want to get that wind in your sails. Okay. So I think I'm done with this one now. Put that away. Okay. So I am going to just create a new slide for. I'm going to write the homework out now so that, because the next section, pay attention, right? It's going to help you. So your homework is going to be to review all 103 stocks. In the NASDAQ 100. So remember I showed you how to get that. You can go to barchart.com, get that list. All right, so if you all want some stocks, look at the chart. decide if you would A, be looking to buy now, or even looting. Okay, this typing obviously deteriorated. So you're looking to buy now, or it's not buyable, or it's I would say, I'll say it's too early. So you got three, right? You're either looking to buy now. So if it's finished the pattern, so that means you can put a trade on, or it's not viable, like it's not lower left, upper right, or it's too early, which means it's still sitting in the base, sitting deeper in the base. Okay, so you can just make it so that you can put these words in: buy now, not viable, sitting deeper in the base, right? Okay, let's get rid of this, and we will bring up my charting tool. Okay. So this is the art part of your trading, right? Because looking at the numbers, looking at the earnings, that's very scientific, and there's a lot of logic and math and that kind of stuff involved. So it's very quantitative. Chart reading is very qualitative. Two different people can look at the same chart and they can read it differently. Okay, so let's have a look at some of the stocks we just looked at. This is AMD. So this is what we just looked at in Yahoo. So let me come back to this one. All right. So let's just go. I'm going to use the examples that we used so that you can see the prices and see the power. The first, okay. So the first one of those, and they're all from the list that you guys built, EPAM. This is the list that, so you notice the G90 group. This is EPAM. So this was the double bottom or whatever it was, right? So when this broke out from there, here's the pivot. So the volume is higher than the prior week. That's the high in the W. Your breakout's gonna be 10 cents above this point here. So the high is 134.78. So when I click, you're gonna see a window coming up here, right? The window opens up, and in that window, you can see Friday, that's the week ending date of that bar. The weekly, that's the closing price. The open, where that week opened up Monday morning. The highest price it traded during that week, low, lowest price. So you look at the high price, 134.78, and you would add a dime to it. So your entry point would be 134.88. Okay, so and you would enter the order, and it would be sitting there as you're watching this form. So let's actually do that. Let's do that real time. So let's go back in time. So you're looking at this, and you start to see at this point, you start to see the basis of a double bottom forming, right? And as that double bottom starts to form, in fact, that week. So if you're doing your homework on each week, and this is what we do every week in Sensor, I go through this process with the group, right? And I give them the buy points. But here you would be on the lookout because you're already looking at this and you're saying, okay, it looks like it's double bottom. I can identify the pivot, and you can have the order in your trading system sitting there. So even if you're at work or whatever happens, or, you know, you're away doing something, the order will get triggered as soon as it gets past 10 cents above that. Now you'd be in this stock. And when you come home in the evening, you can see, okay, the volume was there. Okay, I'm good with this, right? So that's at 136. I don't know what was that. 134.78. So our entry is 134.88. Okay, now let's just go forward, right? So moved up, moved up, moved up, moved up, moved up, 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 down, up, down, up, down, up, down, up, down, down. Okay, let's just say, sake of argument, that you took it to, okay, now it's gone below this 10-week line, and you're going to sell at the end of this week. You wouldn't have sold this week because the rules that we were trading, but when you're starting out, you probably just want to sell here, right? So where were we? 134, right about there. So, so a few minutes work on the weekend, your percentage gain, 22.83%, right? So your stock moved 31.64 in terms of dollars, right? Now, 34.64 annotate. So let's have a quick, so put this in context for you. All right, so if you had put $10,000 into this position and it moved up, what we say 30, but what we say 34% with it, also kind of 31, 34. Okay, go back, get my mouse. Yeah, so it's 34, 34%. Go back to annotate. All right, so it moved up 34%, and you put 10K in. So what's how much money did you make? So you made $3,400 buying here, holding it, selling there. And during that run, there was no pain whatsoever, was there? That was pretty easy hold. You weren't challenged at all. And look at the relative strength line at during the same period. It was outperforming the S&P. Now, if we looked at the S&P through that period, it didn't do as well. So that's just one stock, right? And you just take these one by one, each week by week, string them together and compound it. And before you know it, you'll be in a movie with the Wolf of Wall Street. I'm just joking. Okay, so that's one. Okay, let me clear this. Okay, that was EPAM. Okay, that was the. Let's have a look at the flat base. Microsoft was the flat base. I thought it was Microsoft. It wasn't Microsoft. Maybe it's Paycom. I should have written all these down. Okay, I should have written down all the tickers, but I didn't. So let's look at this one first. Okay. Oh, I think I know what it is. We're off on the angle. I moved it back to that point. Okay, so this was the cup pattern here. And there's the breakout, which is, so here's the high point of the pattern on the left-hand side in a cup. So you would take it about from here. This one moved up, moved up, moved up, moved up. Breaks the 10 weeks, so you would be selling it in this week here. It's probably about there. So that moved up 38, actually $38, and so moved up 21.69%, right? So that's going to be 2,169, and we had 34 before. That's two stocks now, total of 5,569. And you got another consolidation here, and this one's got a handle, so you would buy it 10 cents above the high of the handle there before the market broke. You picked up only 2.5% there. So okay, by way of illustration, this was that's Paycon. That's the cup. All right, so I think Microsoft was the flat base. There's the flat base. So here's the flat base pattern right there. You go 10 cents above the high point. So here's on the left-hand side marks the high. Sometimes you get a little pop above it, but it's still closed below. So you still stick with the left high. Either case, here's your breakout week. From here, you can see it made a nice move to the peak. You're up at 32, but let's say you waited until it broke the 10 week, so you can be selling down here. That's 17%, so 10,000 would be 1767. So those three stocks in a period of very similar time, which is about 17 weeks, I think. Yeah, 17 bars, each one of those. In that run, that's three stocks, 7,336. You had 30,000 invested. So you made on average 24%, 24.45% in a 17-week period. So that's not even the full year, right? And that is the power of this system. You can do a lot more with this, and obviously I want to make it simple. So when you finish this boot camp, you're actually doing this, and everything I'm showing you, you're going to be able to do this by yourself at the end, right? Because each week you're skill building, and you're going to start to recognize this yourself. And the homework that you have, that's what you're going to be doing. You're going to be identifying, is there a point to buy? Yes or no, right? And then what we're going to do each week from this point forward, we are going to look at the stocks that you had selected. And just to remind you, because they're not my stocks, these are your stocks, and they're pretty good stocks. So this is what you guys came up with. I just kept the original names of this. So you can recognize, I don't want to put your names in there, but whatever you call your file, I put up in here so you can recognize your own file. And unfortunately, not everybody did their homework. That's okay. But enough people did. So this is statistically relevant. And then this is what we came up with FinViz, and this was the NASDAQ 100. Actually, I'll just send you the list so you don't have to go and get the, I'll send you this list tonight. And then what we did was identified, I think I figured out why this might be, because this file was I thought so. This file came in a bit wonky. That's why the dupes never came up. I'm gonna fix this right now. Nothing like real life. Okay, Dexcom making me dyslexic. Dexcom. Okay, perfect. I wonder if that's the same problem here. Oops, maybe. Okay, now I think that was vertex document. Perhaps we'll find out on this one. Yeah, this one's fine. Okay, so the green is where more than one of you had the same stock, right? And then FinViz also, when we did the little thing, FinViz, right? So you can see which ones FinViz agreed with you as well. So all of that is in this list here. So put all of those in here, G19. And so what, let's just, each week we're gonna go through this. And we're gonna see how good this list is or isn't, and see if this is a money-making enterprise, right? So Zoom is looking pretty good. So this is in a base. This is in a base, but it's got a little work in a base. This is close to a breakout. This is, forget that. So here's a chart. I mean, is this lower left, upper right? Nope. So you wouldn't even bother with this. What is this? Tags. So I think, yeah, it's on the list. But as a growth stock at this point in time, yeah, I mean, it had a nice run here, and it IPO'd, had a nice run there. But where it's at now, it's like, you know, you wouldn't want to be touching this. Look, the relative strength line, very anemic. So this is in a base. This one's broken out, FNV. So from Monday to now, it's already up for the week 7%. Base. This one's also Amazon putting a lot. Actually broke out last week. Stone, just like pegs, even touch that. Roku got some work. This broke out. Dexcom broke out last week. Solding. This is coming close. It's a nice little consolidation. Actually broken out of that. So this one's up 2%. Docu, obviously, yeah. So this only came in what over the weekend and Sunday, Monday. But actually, that last one was. So that's a nice little pattern. So you would be all over this. That's another good pattern, Adobe. So you guys pulled some good stocks in here, right? I mean, not everyone's going to be a pristine looking candidate. There are, but there are enough stocks in here. If this market uptrend holds, we shall see by the end of the boot camp if they made money. And then the other thing we're going to do is, because your homework last time was take your list of those that the homework, take your list and whittle it down into your best opportunity. So a couple of you sent me those, perfect. I will get those onto the spreadsheet in a few weeks. But the other thing I can do is, because I am going to we are going to track from the time that you guys bought this stuff in. Okay, so forget the chart, let's look at this. So now we can see that these are the stocks that, these are your stocks, right? The best picks of best performing stock is Snap, it's up 24%. The next best performing stocks, KL, and these are from Monday's prices, right? 13, 9, 7, 7, 4. It's a lot of healthy returns up here. And on the downside, you got some not so good stocks. So these have underperformed. But we're going to keep a running. We're going to look at this each session and see what's going on. And the ones, and those of that you that sent in your homework, you can pick your stocks out, the ones that you selected, see it, hey, how did my selection do? Because this is going to start showing you your stock picking prowess, and your stock picking prowess is what makes you money. So that's kind of cool, right? Okay, let me see. Tonight's session was charts. So I'll make sure I covered everything off my list that I wanted to cover. So we covered the, okay, it's this bad guy here. So we covered the basic chart reading. So we looked at the framework of the chart, the price panel, a volume panel. We looked at the moving average, the RSL line. We looked at 3 of the key critical bases: cups with handle, double bottoms, flat bases. Looked at the pivot points, which is always 10% of the highest point in the consolidation. And your pivot point is your low risk entry. It's your point where you have the highest probability of an up move and the lowest probability of it falling back and giving you a loss. And if it does give you a loss, you have a point where you can set a stop loss, right, and get out, cut if you're wrong. We looked at, I showed you Yahoo, how you can set that chart up so you can look through the NASDAQ 100. I'm going to send you the NASDAQ 100 list so you can page through it. That's going to be your homework. And we have a tracking table now of the stocks that you guys submitted. And then each week we'll also, I'll call out the few stocks that were pared down. And now you have your homework. Okay, so that covers tonight's session, and really kind of, and also we did a bit of an advanced thing on charts as well, where I showed you individual bars and volumes. A little bonus for you. Okay, so what questions do you guys have? Let me see. Let me go back and look at the question. Let's see what we have. Where's the handle on AMD chart? Okay. AMD. So here you have AMD. Here's your cup. There's the handle. The handle is that what pullback. So you're gonna go the high of the handle area. So right now it's gonna be at the top of that bar, 58.63. So I add a dime to that. So as it stands on Thursday night, your handle entry is gonna be 58.73 right there. Okay. On the AMD chart, I don't understand buy now. It looks to me like it's still in the handle. Well, buy now means you're looking for a breakout out of that position, right? So you would be putting in a trade. If it breaks out of that handle area, you'll be buying that. Now, typically, because you don't know, you know, it could break out. So, okay, I'm going to have to take you to the daily chart, just explain this. So when the handle is 1 week, it's just a single bar, so it's 1 week. Then you can take a look at the daily bar, and you're just looking for 5 bars, right? And you're looking for a little area of consolidation with a slight drift down. So it's moving up, and this is very close to each other. So you can begin your count there. 1, 2, 3, 4, 5. So you got 5 bars, and then you can stick your point, your purchase price above that one, 58.63. So 58.73, like I said. So you can have an order sitting there, right? Because you've now got 5 days. You can have an order sitting there. If it takes it out, you're in. So that's why it's buy now. So buy now means that you're in a position where you can put a trade order into the system and see if it gets filled. Okay. 34, 34, 34. That's my math. Does a cup with handle not move past the pivot point until after the handle is formed? Can you compare a simple cup with a cup with handle? So that was Paycom. So over here, this is a cup. See, the first bar down, so you can see the basic silhouette of a cup, right? It never pulls back, so you don't get a handle on this one. It just breaks through into high ground. So that's just normal cup. A cup with a handle is going to look more like this, although this is a high handle, just to confuse you, right? In a cup with a handle, you got the cup part, like just like you have here, but then you get a drift back, like with these 2 bars over here. So you get a little drift back, and then when it takes the high of the high point of this little consolidation out, which is this bar, you see the volume's higher there as well. That's your breakout point. So the difference is a cup has no handle, it doesn't drift back down. A cup with a handle has a drift down. And as we move forward, as some of these stocks make these patterns in over the coming sessions, I'll point them out to you. AMD. So here's another one. So this is a slightly better. Microsoft is actually making a little cup with handle. So here's the handle. So you got the cup, and then you got that little handle. And if we go to the daily, it's a little bit clearer. So you see how it drifts back down, a little pull back here. So you got 1, 2, 3, 4. That's only got 4 days in the handle. You really want to count the first day then, so it's got 4. By the end of tomorrow, this could be set off, like when we look at it on Sunday, this might be on the list to trade next week. Okay, and does the handle need to be a certain number of weeks? The handle, typically it can be 1 week on a short cup. A cup can go anywhere from, so you need 6 weeks of the cup and 1 week of the handle. That's the shortest cup pattern you can have. And then from there, the cup itself can go as far as 65 weeks. And then obviously you want to have a handle that's somewhat symmetrical. So on a 65-week cup, a 1 week handle isn't going to cut it. So you're probably looking for 8, 9, 10, 11 week cup handle just to keep the symmetry. And as you get into this and you see more charts, you're gonna start to see, there's just, you'll train your eye over a period of time to see these things. When you're first looking at this, you're gonna be trying to say, oh, this doesn't make sense, this doesn't make sense. So, and here's the trick I was telling you about earlier. So when you look at this chart, right, you don't have to name them. So when you're starting out, just look for periods of consolidation like this, and just draw a box. So when you box it like this, now it's a little bit easier for you to see. Okay, you can see that's some kind of consolidation. I may not know what it is, but I know it's a consolidation. And if it comes out of that box, I'm going to buy it. You can do the same thing over here. Right? When it comes, here's the little box. So it's in a consolidation. When it comes out, I'm going to buy it. And there's a very famous book, a very famous trader called Nicholas Darvas. And Nicholas Darvas was a dancer in a dance troupe, danced around the world, and he used to have the Barron's magazine sent to him by mail every week, and he would just look at the week's closing prices, and he figured out a way just to draw this by hand by plotting the week closing prices. So he would look to see, where it traded at the top of the box, where it traded at the bottom of the box, and then when price traded above the top of the box, he would enter. If the price traded below the box again, he would sell. And he went on to make $2 million back in the 50s, and I think it was 2 years. Maybe it was less than 2 years. And that was, so that, you don't have to make this very simple, complex. You can make it, and I've just given you $1 million secret, which no one's going to tell you, because they want to sell you expensive tools and get you on a $2,000 a year subscription, all that kind of stuff. You don't need all that stuff. Yahoo's good enough. All right, I think that's it. So you have your homework. I will send out the NASDAQ listy so you can practice. Go to finance.yahoo.com. And the next session is going to be on rules. So we can look at rules, because you need a set of rules. It's going to be like your operating manual. So you've got a lot of it, and I've covered it. But what you need next is, okay, so I got in. So I got in here. Okay, so now what? What do I do next? So the rules are gonna help you with what do I do next? When do I cut my losses if I get into trade, or when do I take my profits if it's working? Okay, so that's gonna be the next session. And then after the next session is over, I think we'll probably start stretching it out, because I want to see a bit more time on the charts, on the stocks that you guys have picked. And upcoming sessions are going to include. So there's a couple of the sessions are going to get a little bit more advanced from this point forward. So you got rules coming up. We've got portfolio management, which is very advanced. Markets is advanced. And we have a couple of mastery sessions as well. Okay, so I think I am done for tonight. If there's any question, check the chat box. And if you like all this stuff, don't forget, you got a Thousand Oaks meetup. Leave a comment just to harass all of the people that didn't turn up. No, just kidding. Okay, nothing else. I'm going to say good night.